Imagine this: a significant opportunity to save money on your next electric vehicle EV purchase is still within reach, even after the looming deadline of September 30th. While many believe that the federal EV tax credit will vanish after this date, a little-known loophole could allow savvy shoppers to still benefit from this financial incentive on vehicles delivered later. But here's where it gets intriguing. The federal EV tax credit, which has been a boon for electric car buyers, offering up to $7,500 in savings, was officially set to be discontinued following September 30th, as per the recent legislation signed by President Donald Trump. However, the Internal Revenue Service IRS has provided new guidance that reveals a way for consumers to still claim this credit, even if they take delivery of their vehicle after the cutoff date. Initially, it seemed that to qualify for the tax credit, buyers would need to have their new EV in hand by September 30th. Yet, the IRS has clarified that this is not strictly necessary. According to their updated rules, if a buyer has a written binding contract and has made at least one payment before the deadline, they can still claim the tax credit when they eventually take possession of the vehicle, regardless of whether that occurs after September 30th. This means that if you act quickly, you could secure a deal on an electric car by signing the necessary paperwork and making an initial payment before the deadline, even if the vehicle won't be ready for you to drive home until later. The IRS advises that buyers should receive a time of sale report from the dealership either at the moment they take possession of the vehicle or within 3 days thereafter. The exact duration for which this loophole will remain applicable after September 30th is still somewhat ambiguous. In theory, a buyer could potentially claim the tax credit for a vehicle that won't be delivered until 2026, provided they finalize the contract and make that initial payment before the cutoff date. This presents a unique opportunity for automakers as well, who can utilize this loophole to encourage sales of EVs before the deadline, enticing customers to commit to a purchase even if they have to wait for delivery. Caleb Miller, a passionate automotive enthusiast, began his journey into the world of cars at just 13 years old. After graduating from Carnegie Mellon University, he fulfilled his dream of writing for a car magazine by joining the Car and Driver team. With a particular fondness for quirky and obscure vehicles, he aspires to one day own something as unique as a Nissan S-Cargo, all while being an avid fan of motorsports. What do you think about this loophole? Is it a clever way to extend the benefits of the tax credit, or does it raise concerns about the future of EV incentives? Share your thoughts in the comments.